In the last couple of months, NIO has been successfully rebranded by the investors community. Everyone today connects NIO with the terms cash burning, unsuccessful. So, it's pretty hard to touch NIO stock these days. And so I want to use this video to talk about NIO Power and specifically, and a couple of things that I think NIO needs to reconsider in order to, kind of counter this important trend here when it comes to the investors community, because ultimately I think this is a really existential threat to NIO here. Now, I pointed out in previous videos and also on my Twitter that NIO was burning the same amounts of money than Tesla did at the various stages of their company in the past. However, if you are in a situation like NIO, that in the previous couple of months that your sales are on a declining trend and also you keep on ramping up the cost, then of course it's getting hard to believe that actually NIO might end up in a similar situation as Tesla has, namely turning around the ship and breaking even at some point and managing to grow sales and reducing costs, and over time, getting out of this trend of being a cash burning machine and instead get to where investors are really looking forward to positive cash flows and discounting those cash flows into the future and therefore a rising stock price. Now, one of the main points of criticism for NIO and also how this cash burning machine was established as a term out there for NIO is around battery swapping, right? There has been many videos, most of them by Tesla support channels, but also some NIO community members and so on, around how expensive battery swapping is, and that this is actually the main reason why NIO will never be as successful as Tesla, for example, simply because battery swapping is more expensive than supercharging. Now, what is interesting is that if you look at some of these things in detail here, for example, I pointed out that there is a tweet by this Tesla guy who is actually supercharging in Sweden during peak time, and he has to wait, and he's pointing out here how there is a Tesla manager, a lady who's actually manually giving out numbers for, sorting out a queue here for Tesla cars to charge. And so it's funny because, one of the most persistent arguments here was that, battery swap stations are so inefficient because they are staffed with, NIO staff that's actually helping to performing the battery swap. Now, meanwhile, the situation is entirely different. Most of the NIO swap stations by now are becoming unstaffed and actually fully automatic. And in addition to that, you even have a superior user experience, namely that if you approach the station, you can log in your battery swap. If there is somebody in front of you, you will get a number in the line, and you know exactly when is your turn. There is no way of worrying about do you have to park and secure the space? No, nothing around this. You just turn up at the battery swap station when it's your time to swap. And so this is one of those common myths that are now manifested out there, which is that every battery swap station is like manually, and you need expensive stuff, especially in Europe, to help with that. And there is no way that this could ever turn into a business. And I think this is where it's getting to the core of the problem. If you're looking, for example, here at another tweet by Martin Viejas, so this guy is running investor relations for Tesla. He's going out there and fighting some of the misinformation. This one is about a different topic here, for example, degradation of battery, and he's backing up his arguments with some real data and good arguments and slides and graphs. And we simply don't have that for NIO, right? We don't really know what a battery swap station costs. We don't know what is the business case for NIO. Where are they heading to? What are they trying to achieve with NIO Power in the end? For example, I can only make my estimations here in which, yes, battery swap stations might be slightly more expensive to build, and I'm assuming they would need around $2 billion in cash in order to reach their goals of achieving the 4,000 swap stations or 5,000 globally. But these are just assumptions. We don't really know the true cost here, and NIO is really not communicating at all any of these insights during earnings call and so on. And so I would argue it's actually now the time for NIO to come out with some more transparent information and give investors the information that they need, because frankly, investors, they are really looking at the cash burn and the balance sheet and the runaway that NIO is having, and frankly it's not looking super bright. It's better than what I just showed with Tesla, where they have been in the situation in 2017, but also they got to the verge of bankruptcy back then, and we don't really know what's the plan for NIO. They have just raised money with Abu Dhabi at a near all-time low, and is this the strategy out there for NIO? I think investors will really be cautious in coming back into the stock unless they get some more confirmation and real plans by NIO. And I think investors are really not willing to invest in NIO unless there is more certainty around how NIO is actually looking to achieve certain KPIs along that timeline in the future. And this really shows in the stock price. NIO has been the worst performer even amongst their Chinese EV peers, and not everything can be actually blamed on the deliveries. For example, XPeng has even sold worse in my point of view, especially given that they actually need more volume than NIO, right? So it is really an issue of trust and understanding of the company, and there is nobody telling us the benefits of battery swapping. For example, it's using up less space, the digital performance or the digital experience that I've just mentioned, stuff like that. NIO has the only system that is already today ready for full autonomy. So ramping off the highway, swapping, ramping on again, all of this can be done autonomously already. There's no way for doing that with supercharging. Supercharging as of today still, let's say Li Auto is now getting into EVs. They today still would invest in a technology that ultimately would mean sunk cost for the age of autonomy. NIO doesn't have that. NIO has future-ready technology, future-ready upgradability of batteries and stuff like that. But they don't talk about this in the earnings calls. They don't give us any KPI to watch. And now, finally, we might see a turnaround since they started to charging for battery swapping. I'm hoping and expecting that they will start to become more transparent in order to tell us numbers like how high is the acceptance of a paid battery swap. Also, things like the head of NIO Power, Xunfei, he's starting to go out a little bit more and doing podcasts, and he's posting on Weibo. But overall, I fear that if NIO really wants to turn around also the stock, and that might be really important for the company ultimately, because they might be in a situation where they need to raise money again, and you don't want to do that again at an all-time low. No, you want to raise money when the stock price is more healthy, and still they need to turn around that story, because until then no investor will trust them with their money as of today. And the shorts narrative, with all of that created in the last couple of months, will be too strong for them in order to get new investors on board. To be honest, it's just my sense, but I feel that there will be announcements very, very soon. Maybe something in terms of partnering, maybe something more about the strategic aspects of Abu Dhabi. But currently, the way it is, it can't continue. I think NIO management has realized this. That's just my opinion. Let me know down in the comments what you think about it. Thanks for watching, and see you in the next one.